Good morning, traders. Welcome to this update on Friday the 30th of September, brought to you by Phoenix Blue. I'm Tom Colley, and I'll talk to you about the news and the markets this morning, and we'll start over with yesterday's news. We had a speech from Kuroda, the governor of the Bank of Japan, early yesterday morning. We had a little impact from that. We then had some positive data on final gross domestic product and unemployment claims out of the States, and then a speech from Janet Yellen at 9 p.m. last night. Now, very little came out of that I can see. That speech, I don't think it was directed at rates, etc., etc. It was more specific to a conference. So we did see some positive data there, but we saw a lot of volatility on the dollar yesterday intraday, which led to intraday trades being stopped and things like that. But we'll have a look at that in a moment. Overnight, we've had another Kuroda speech, which again I haven't seen any feedback from at all. We had the manufacturing PMI, the CAIXIM, which is the non-governmental manufacturing PMI, came in bang on forecast at 50.1. And to be fair, news and things that drive the market coming out of Japan have been really quiet over the last few months. I'm sure that will change. That's not a figure that will change it. On tomorrow night, we have the government manufacturing PMI, which we tend to feel less confident about. But as I said, we haven't seen the Chinese economy impacting directly other markets for a number of months now. We'll keep our eyes on that. There is always that possibility. Well, there's almost a certainty that will happen. But at the moment, what that seems to indicate is for a manufacturing economy like China, very much maintaining a status quo. If you remember, anything above 50 is considered to be growth. Anything below 50 is considered to be contraction. We also have current account data out on the pound today and gross domestic product on the Canadian dollar, but not a lot. We have seen as a very much a ranging week, but quite volatile within those ranges. Here's the dollar index, and as you can see, really quite spiky through here this week. We've stuck really within this range that I've got indicated here. We really need to see a break above that or even below that to get any clear dollar direction. But this has been an ongoing issue, and I just happen to be looking back, and this is the monthly chart for the dollar index. This bar here is June. So we've got June, July, August and September, and look at how all those bars look. The open and closes very close together. They're all doges. I think technically, or in terms of candles, you could call that barbed wire. But what you can basically see is absolutely no decision. Everything around the point of control through the axis of the triangle there, which again we can see here, which is timed with the US presidential election. As I've said before, it may be that we get feedback and one candidate gets so far ahead of the other on opinion polls, etc., before that date that we get a breakout before that. But that seems to be where we're funneling towards. Now, that's also been reflected in all the other currencies. Again, long period of ranging, or volatile ranging, shall we say, through this week. Again, we've got this triangle here. It might not be on the same time scale, but we have got this funneling into this point of indecision, and really price closing every day on the point of control, which is the exact equilibrium on decision on short or long. The pound again been ranging, but we've clearly got a downside to this. We know this is the Brexit vote, so we're still very much biased short on this, looking for opportunities to short this market from recent highs. But again, this week more limited than it's been the previous week. The Aussie is one chart that has less ranging. We've had a bullish month from the Aussie, which is what we would have expected based on seasonal analysis. Unfortunately, we haven't had the dollar strength or dollar weakness, sorry, to allow us to take much advantage of that. We are a hour short from this touch on the trend line at the top. There is an opportunity to add in again today below this level for a retest of that level. However, today is the last day of the month. Major players, the banks and what have you, will be looking to close profits and before the start of the next month, also the end of a quarter, so maybe more significant from that. So although I actually woke up this morning, I thought, oh great, I've been waiting for that. I will actually placed the order, realised it was the last day of the month and took it off, because I think that will create a lack of liquidity, uncertainty and last day of the month type moves that we want to be avoided. So let's be positive and go into next month on the basis that we'll have a fresh start. Over on the Kiwi, this is one that we've been watching all week. We were hoping for an opportunity, a price action opportunity from the top of this range here. We've also got a couple of trend lines here. We were hoping that price would actually come right into the crux here and give us a trade down to this level here, which would have let us to get money off the table before we got to this level, in the hope that we saw a break. That break doesn't look like it's forthcoming, but that remains a key level, and a break either side of that. So we will be going through to next week looking for a break to the downside through there. Over on CAD, I will skip that slide because I've done it again here, and this is CAD versus WTI. Now, we've seen a big bullish move on crude oil, WTI here. That followed the announcement of an agreement between OPEC members about restricting the output of their crude oil. There has been some talk of uncertainty whether this will actually come to effect. They've effectively made a pre-agreement which may be November before that's actually ratified, and they have been known simply to talk up the market for their own benefits when there actually isn't really potentially a real agreement on the table. It remains to be seen, but we have been back up to this trend line here. If this trend line's accurate, we've got a pull back to that there, so we might see more long side here. What really interests me about this, though, is if we've got the US dollar CAD above it. Bear in mind, the downside is CAD strength, the upside is CAD weakness. Through this period here and here, I've dotted or dashed these trend lines here. You can see that they've been very much in keeping, and every time there's a strength in the price of oil, that's been replicated by a low back down to a trend line showing a strength in CAD. We've now had this big push up here, but it hasn't been replicated in CAD. Now that just reinforces what's come out from in terms of data and from the Bank of Canada recently, when they've been talking down the economy, saying it might take 3 to 5 years to recover from the low oil price, etc., etc. But what this means to me is that the Canadian dollar is weak. It normally operates or is very, very tightly linked to crude oil, but that link seems to be weakened because of the weakness in the currency. So that gives me some confidence that we need to be looking to the upside, which against CAD weakness, to a break of this level here to take that back up to the upside. Through the back end of last year, we did see CAD showing a great deal of weakness right through certainly the second part of the year, and the highs from the beginning or the end of last year would be certainly achievable if we can get above this level and things play out as I've mentioned it. Over on the S&P 500, we clearly had this ranging period here which we broke out of very dramatically, and we're now within a triangle stroke range in here. Again, this will also be governed by the presidential election, but this triangle doesn't pan out to around the 8th of November, which is the date of the presidential election, this pans out to about the end of October, the end of next month, for there to be some sort of, shall we say, decisive move in this market. Now, we do expect equities to be strong from here back into the back end of the year, particularly strong for the Santa Claus rally in December. Are we waiting to get to the end of the month to see if we get to the break to the long side for that seasonal push into the end of the year, or will we get the break below? And obviously that will be very much tied into safe havens, particularly gold, and obviously things like the yen. Okay, guys, that's it for today. Somewhat more of a summary. It has been a relatively quiet week. There has been a great deal of short-term volatility. Let's hope we go through to next week and we get some sort of indication of where price is going to go, and a great deal of opportunity. Now, if you like the way we trade here, and we do trade with fundamental analysis, technical analysis and commitment of trade analysis, there's an opportunity for to come to a meeting we have in London where you have 4 hours free trading live with our top fund managers. Also plenty of opportunity to ask questions, etc., etc. We haven't got a date for the next event absolutely yet. It normally falls the third week of the month and is an afternoon in a London location. If that would be of interest to you either next month or future months, if you pop onto the website phoenixblue.co.uk, send us a message through the contacts page. By Monday, I'm sure we will have confirmed dates up for the next event, which will appear on the events page, which I normally have here to show you. But we have been doing the same event in Norway this week, so we're just slightly behind with bringing things up to date there. Okay, guys, so last day of the month, last day of the quarter, any trades very cautious. Nothing wrong with sitting out today. New month starts on Monday. Last quarter of the year. Let's hope for some nice, decent-sized opportunities. Have a great weekend, and we'll speak to you next week. Take care.